Welcome to our Tuesday night podcast. We are live, guys, and tonight we're talking about buyer strategies. We are in a crazy market right now. It's the end of the year. Happy holidays to everyone. I feel like I haven't been live in so long. Last week, we actually did a replay because I was away, and so I'm happy to be back, and we're ready for 22 right around the corner. We've got on with me tonight our executive licensed assistant, Melissa Levy. She is she's gonna help us get through this, talking about the strategies. We have 5 strategies for buyers. If you're a home buyer, if you're in the market right now to buy a home, you're gonna want to stick around for this entire podcast. We're going to be talking to you for about an hour here, guys. And if you can't stick out the whole hour, go ahead and like this video so that you can replay it. We're also with Brenda Evans. Brenda and I have worked together for quite some time, and I think probably close to 10 years. And she's amazing. We're going to talk about some loans. She's going to drop off. She's not going to stay with us the whole time, but we were fortunate enough to grab her tonight so that we could talk about what's happening with interest rates and the different types of loans. So we're going to dive right in here, guys. Thanks for joining us. I'm Todd Sachs. I'm a broker here at Sachs Realty. And anyway, welcome to our Tuesday night podcast.
Hi, Brenda. Hi, Todd. How's everyone this evening?
Fantastic.
Wonderful.
Awesome.
Good evening.
Brenda, I'm so glad you joined us tonight. I know it's short notice and awesome to have you here to get it firsthand, but we are in a red hot market. And it's still a seller's market. And the big question is, how long is this going to go on for? And it appears to be no end in sight. So, Todd, give me your thoughts about that.
Yeah, well, everybody was saying that, the market was going to crash. And I guess things slowed down a little bit in the summertime. I think we had like a traditional summer. Everybody was excited to go away. And they did. They went away on vacation, and it kind of slowed the market down a bit. And then everybody panicked, and sellers were panicking because their houses weren't selling in a day. And the agents were starting to freak out a little bit, saying, "Oh my gosh, the market, the sky's falling again. There's going to be another '08," and all this just kind of controversy started. But we are seeing ridiculous pressure on the market still. It's fired back up again. The buyers are back. I guess they're home from vacation, and it's a very stressful time. We're going to talk about these 5 really tips, strategies on buying. But guys, I want to say that I am a broker here in Maryland. So if you're anywhere else other than Maryland and you are listening, I know the Maryland laws. I may not know the state laws where you are. So I want you to kind of listen to what I have to say, what we're talking about. But really, I want you to lean on your agent, whoever's representing you. And if you're not represented and you need somebody, if you're here in Maryland, I'd love to talk to you. We help residential and commercial clients. But if you're anywhere else in the country, I have an amazing broker network. I'll be glad to point you to, very competent agents and brokers that can help you. But how long? I mean, we really don't know. Nobody has a crystal ball. There is a lot of pressure right now on the economy. We're seeing, inflation. We definitely are seeing that. I'm not a financial advisor. So, I don't have, like I said, a crystal ball, but we are seeing pressure. What we do know about the real estate market is that it kind of follows along with inflation. So as inflation is rising with rising salaries, rising prices, the housing market traditionally or historically increases in price as that inflation is growing. And, but what we kind of think is that, and we're going to talk about interest rates rising, but what we kind of think is that in the early, when the Fed start to raise the interest rates, or the bar, what banks borrow money, the amount that they pay for money, when that starts to go up and interest rates for mortgages start to rise, we do think initially there may be, like a little bit of a slowdown where people are just kind of not ready for it. But we're still in all-time historical, lows with borrowing. I mean, when I bought my first house, I think it was back in 92, my interest rate was like 7%. So, how long is the seller market going to be? I think it's going to be around for a while because we just don't have enough inventory for the amount of buyers that are out there.
Yeah. Brenda, give me your thoughts on that. Also, why don't you take a moment, introduce yourself so everyone knows who you are.
Hi, I'm Brenda Evans with Guild Mortgage. I work primarily in Maryland, but my company's all over the country. Thanks so much for having me tonight. So it's wild still. It has been, if I could choose one word, I would choose the word steady. People are buying homes continuously. A lot of first-time home buyers, and people are selling actually the first home they bought. And then because the market's so hot, making a great profit and then buying their second home too, or third. It is truly still steady. And yes, we just had a Fed meeting, and yes, they're talking about, increasing maybe 4 times next year, prime. However, and we really thought that we would see a jump in rates even this week. Yet, knock on wood, they're still staying, well, they're volatile, but still staying super low. I just locked in a 15-year refinance at just over 2.5%, which is amazing, and saves so much interest. But anyway, it is not dropping off. January is still, first quarter business is still coming in strong. A lot of it seems this time of the year, a lot of first-time home buyers have been maybe working all year to get ready, and a lot of them are ready. And as far as the daily news can really affect our rates a little bit here and there. It's crazy. Yes, there's talk of inflation. That's not good for mortgage rates. And however, though, the stock market with its insane volatility, it could go, when it goes way up high, maybe we have a little drop, or actually maybe our rates go up a little when it goes, when things drop and it's not good. Oh, maybe our rates get a little better. So there's so many, and then whatever's happening with COVID and the world news, there's so many things going on right now. It's a lot to keep up with. But the bottom line at the end of the day is rates are still low and people are buying homes. And if someone wants to sell their home, we would love to have your inventory. How about that?
Well, we're going to ask you some questions here shortly about the different kinds of loans. So
sure.
We appreciate you sticking around for a little bit.
Yeah. So Brenda, if we could just get an overview. I know that the most important thing doing when you're looking for a home is to get that pre-qualification. Would you say is that step number one when they connect with you?
Of course.
And how do they go ahead and do that?
Really, we just get that baseline application so we can review credit and assets and income, of course, debt to income, et cetera. And then depending on what the needs are, you don't need 20%, of course, to buy a home. We have different programs. We have conventional from 3% to 5%, 10, 15, 20. We have, of course, FHA is very friendly with 3.5% down. I'm actually currently working now with helping some veterans with some VA loans with 0 down. And also if you're buying in a rural area, once again, 0 down with USDA. There's many, many options. And there's also a lot of programs. The state of Maryland, for instance, Maryland Mortgage Program has 3% down programs, all different kinds. Anyway, whatever you need, whatever your personal goals are, we just take the information and try and make it work for you.
Right,
it's
well,
good
we'll
to
catch
save
up
some
on
money
that.
if you can going in.
Yep, definitely. So, one of the reasons why, guys, a lot of you are asking, why is it a seller's market? But like Brenda's saying, I mean, the interest rates are so super low right now. We've never seen this before. And there's such a low inventory of move-in ready homes. So, if you're looking at houses that are, recently renovated or updated, and that the buyers, I mean, we just got the National Association of Realtors stats on buyer trends for 2021. And one of the things that they said was that the buyers right now don't want to do anything. I mean, they don't want to paint. They just want to move in and, live their life. Everybody's a lot of people are working from home, so they don't have a whole lot of time. They just want to move in, get set up and live. But there are definitely a lot of challenges when you're going to buy a house. And I just want to kind of go over those before we jump into our, 5 tips here. 1 in 3 of the sales that's happening right now are cash. So a lot of the buyers, they're stressed out because when the multiple offers are coming in, they're competing a lot of times with cash. And we're going to talk about some ways that you can combat that, because the sellers still care about price. And we're not necessarily talking about a big difference either when we get into talking about pricing strategies and things like that. But flexible dates really become a challenge, because a lot of times the buyers, they want to get in right away. And some of the sellers, it's like, what comes first, the chicken or the egg? Do I buy a house before I sell my house? Because if you get a contract, if you're a seller and you get a contract on your house, you may not find a place to buy yourself. So, you could be out of a house if you don't have the right contingencies in place. So, you have to be flexible as a buyer today with those dates, because most people can't afford to buy another house until they sell theirs. So, you got to work with them. A lot of times we're seeing what's called a rent back, where, the seller wants to sell today, settle, in a month, but then still have the luxury to rent back for a couple months. And really, as a buyer's agent, I never recommend that. I just don't like it. Things can happen while they're living in the house. But we're going to show you some strategies. The other thing is as-is inspection. So, if you're buying a house right now, you may have heard people talk about buying without inspections. I don't ever advise that. As a buyer's agent, I'm really concerned about some of the main operating systems in the house that could cost you a lot of money. And a lot of buyers, they don't have a lot of cash once they buy. You heard Brenda talking about, money down and things like that. So a lot of times these buyers, you're depleting your savings. So without doing these inspections, if you get an $8,000 or $10,000 repair, it could put you into, financial stress sooner than later. So we want to see that as a buyer, we want to see that you are getting inspections. We're going to talk about some of the strategies around the inspection. But you're competing too with, there's an amazing amount. They say 1 in 3 of the buyers out there right now are hedge funds or institutional buyers. And so you're competing not only with cash buyers, but you're also competing, and there are a lot of cash buyers too, but institutions buying up this inventory so that they can turn them into rentals. A lot of times the hedge funds or, the institutional buyers are buying these houses with the intentions of maybe keeping them 3 or 5 years, 7 years, gaining the appreciation, but turning them into rentals. So they're competing with you in some cases. And then the other thing, as Brenda was talking about the different kinds of financing, and guys, and look, I'm just giving you what I see and what I hear. But a lot of sellers don't like different types of financing when they have multiple offers coming in, because they feel, and in some cases, they're being advised that, by a listing agent, maybe that, that loan is going to have a more strict appraisal process. So, where you're talking about like a conventional loan may not be as strict as a FHA or a VA. So you're competing with that too, especially if you're first-time buyers or you're getting a VA loan. You have to know what you're up against. So we're going to talk about that a little bit too. But the biggest challenge that I want to go over that I think that buyers are experiencing, we're going to talk about how to select an agent tonight. The biggest thing that we're seeing is agent fatigue. We heard a new term called buyer fatigue, probably started about a year ago, where buyers were getting very stressed out. They were losing the houses that they were putting offers on. And there was a thing called buyer fatigue. In a lot of cases, sometimes if they had children, they would bring them. The children would get excited. They'd pick their bedrooms, and then they wouldn't get the house. And this would happen 3, 4, 5 times. And the buyers were so upset that a lot of them just kind of backed off and said, you know what, I'm not going to buy right now. But now we're seeing what's called agent fatigue. And agent fatigue is your agent may not want to write the offer. So a lot of times what I'm hearing and seeing when I'm the listing agent is the agents are calling me up and they're just going straight down the path saying, is it worth for me to write an offer? What the heck is that, right? So, when I'm seeing that agents are starting to do that, one of the things that we're going to talk about tonight is selecting an agent. So you need to be prepared as a buyer to make sure that you're asking your agent the right questions. So again, guys, I'm a licensed broker here in the state of Maryland. If you're represented by an agent, listen to them. Don't, I'm not advising you as a buyer. I'm just giving you tips here. And I certainly can. If you're in Maryland, I can advise you if you don't have an agent, but let's go ahead and dive right in. So we want to kind of talk about being prepared. And with that, I want to bring Brenda back in. And Brenda, if you can give us just a couple tips on how buyers can be prepared as far as being qualified. And what does that mean? What does being qualified mean?
So it's real simple to I send an email or my website and you hop on and input your information and follow the prompts, finish it up. And then what's most important is in my review of your loan application is to make sure you have your last 2 pay stubs and your W-2s and your assets in the bank. And maybe you have a gift as an option for a down payment or a 401k that you can withdraw some money from. What I need is as much information as I can possibly get. It's personal what I do. And that gets us started. And then depending on lots of different variables, like we said, it's all about credit, income, and assets, where you are, where you want to be. The most important thing I ever ask is, what is your monthly payment comfort zone? When I pre-qualify people, it's not what you're pre-qualified for. It's what are you going to be comfortable paying monthly for a mortgage, number one. And then how can we get you there? Working with the agent, finding the right price point, finding the home you love and getting you in there comfortably with your mortgage payment. And depending on what you have, to put down, that's going to, of course, affect everything. With this competitive market, if I could share one thing tonight, everyone listen, please. One thing that people are shocked about, it is, so you say you're a first-time home buyer, you're going to buy a home for $250,000. Your down payment, if you're putting the minimum down, 3.5%, might be minimal. And then there's this thing called closing costs and escrows for taxes and insurance. When you're buying a home for about $250,000, $300,000, your closing costs and escrows for taxes and insurance are going to be more than that 3.5% down payment. So,
can you give us an example of how much? So let's say,
if you want to buy a house for
$250,000,
$250,000, you need $20,000 to cover that 3.5% down payment, and the closing costs, which our title company experts help us with, taxes, state, county, city, whatever. And then the escrows, that's a big nut for taxes and insurance. that really adds up. And depending on what kind of home you buy, some homes have really low taxes. Maybe someone's owned it for 25 years and the taxes have crept up and and others, it varies tremendously home to home. So when you're out there, you need to be in close step with your lender and your realtor. And each home has a unique profile. Get yourself pre-qualified. Make sure we have all of your information. If you're self-employed, if you have commission, we need every single detail and more, so that we're prepared for whatever situation we come across, and can make sure we get you in the best possible loan program. One more thing, in this competitive market, conventional lending, a conventional loan is, yes. Conventional loan means you have a little better credit maybe than an FHA buyer. Now, the bottom line though is, when it comes to this rising market, rising home prices, appraisals can be an issue. The strongest loan in the world is a conventional loan where you have more than 20% down. Just a little tidbit. Because if you have 30% down on a conventional loan and the appraisal comes in short, it's okay. You're still going to get a similar loan situation to 20% or 25% down. Similar.
Brenda, I just have a quick question. I know that there's been a lot of talk of millennial buyers having gifting and gifting funds. Is that what is, because I haven't gotten a clear answer on that, what is the amount that can, I guess, be in a bank or given to you before it is considered not a gift? I know that that's a question a lot of the times.
So with gifts, it's best from a family member. And really, gifts are extremely flexible. And what we need, no matter what the kind of loan, is simply a paper trail from the family gift giver, leaving their account, going into the recipient's account. Gifts are very flexible and can be very large. If you have someone that wants to give a 20% down gift to their family member, so be it.
We like gifts.
Yes, we love gifts.
Well, I heard that about 7% this past year of the buyers, of the millennial buyers, it may have been more than that, but it's at least 7%, actually had their down payment gifted to them, right?
Absolutely.
So, do you see that's true?
Family member, why not? That's great.
Does that sound accurate? Does that sound
about 7%? Off the top of my head, it's probably, if I trace my numbers, that's probably close, Todd.
Yeah, close. All right.
Yeah. And so just an overview, Brenda, the things that are, the most important, obviously, is for them to get to you all your financials and to know their budget, and to, again, have that, for the 250 range, that would be a solid 20,000 that they should just kind of set to the side that they would need to have.
Right. Whether it's from, again, a gift, savings, a 401k, those are the ones that I see. Savings. What a concept.
Yeah.
Love that. But there are other options as well, as we discussed. Yes.
So we'll count backwards. So tip number 5, guys, is be prepared, not just financially, right? Make sure you're saving your money, because when you're competing, you want to make sure that you're successful in this hot market. And Brenda's saying that conventional financing is obviously the best way to go. And Brenda, tell us a little bit about the appraisal process. Is it true that the appraisals are more lenient on conventional financing?
Okay, hear no evil, say no evil. Yeah, no. That sounds like myth to me.
Okay.
Yes.
Okay.
Complete myth.
All right.
We are highly regulated when it comes to appraisals.
I just didn't. How about as far as in the back end? I mean, aren't there like an FHA and VA? I mean, everybody, I guess, is looking at the appraisal from a sort of like an in-house appraiser, right? Is that what's happening now? So the appraiser goes out, and the banks, they have their in-house appraisers too?
Okay. So we, again, back to the high regulation. We work with a pool of appraisers. It's completely random, and they have to adhere to all of their standards, rules, regulations. We are never, as a lender, personally, me, an LO, loan originator, ever allowed to speak of value. I always have a very good conversation with the listing agent. The listing agent should be the pro on the comparables from the last, 90 to 180 days. They should know inside and out what's going on. And they, to me, have all the control.
Yeah, but we know that the houses are selling for way more than what they're, I mean, when a listing agent is comping out the house, I mean, what's happening with these, with buyers is, I mean, these numbers they're new highs.
So that's a challenge. We are in a cycle where, yes, the values are rising, and it is tricky because the comparables have to keep up with the rising values. Yes. And it's a gradual, steady process. And I have seen, gradual rising of the home prices versus the contract sales. And I feel like it's catching up, the value, and the appraisers are able to get, say, maybe better value now than they did 12 months ago. The market, it catches up, it kind of corrects itself with time.
Got it.
So, yes.
Awesome. We appreciate it. We appreciate you being with us this evening and talking a little bit about the mortgage side of things and where we are right now. Guys, we will publish Brenda's information. If you would like to reach out to her, you can do so directly. We'll make sure her contact information is in the show notes. Well, thank you so much.
Thank you, Brenda.
My pleasure.
All right. Have a good night. We know you've been working since the wee hours of the morning. So we'll let you.
It's all good. Thank you. You too.
Check it out. See you later.
Bye.
All right.
Okay. So we are going to move on to our next number. And our next highlight is going to be, we're going to talk about the agent, selecting the agent.
Before we go down that road, let's just kind of talk about, I want to mention one more thing about being
Sure.
prepared
Yeah.
for the buyers.
Yep.
Because besides being financially qualified, and as Brenda was saying, understanding what you can pay for in house payment, what you're comfortable with, not necessarily what the bank will approve you for, but where, what you want your payment to be. And besides saving money, one of the things that you need to have, especially in this hot market, is you need to know what your must-haves are. Because what happens is a lot of times I see buyers getting attached or sort of settling for a house, and they haven't really established what those must-haves are. What's checking the boxes for you, so that if you are going to pay top dollar for that house, and we'll talk about, how you can justify that, or, what happens during the appraisal process of you getting a loan. It's a lot easier when you go out and you look for a house if you know what it is that you want. And we know, Melissa, buying a house is not just something that you do to satisfy today or tomorrow.
Yeah.
Right?
The average.
Yeah.
I was just going to say, on average, people, when they're buying a house, it's, 5 to 7 years. And so you have to kind of think a little bit ahead on what's going to be happening there. What's my life going to be like in 5 years? Am I going to need more space? Am I going to potentially be working from home? So I think if you have in the back of your head, it's hard to do though. And I think that's why it's so important to have an agent who can do that for you and think about things that you're not going to have pop into your head.
Absolutely.
Yeah.
So how many bedrooms, do you want? Do you want a basement? If that's important to you. Do you want a yard? What kind of a yard? Can you do handyman type work? Are you good with making repairs or upgrades or updates to your house? And so kind of when you're looking at things, you're kind of looking through the best lens that you can when you're, looking at the limited inventory that's out there. Don't be in a hurry unless you have to be. Take your time doing it, because chances are, again, if you're going to be competing for that house, you want to make sure that it's something that you're really happy
And that's
with.
another good point. I think sometimes people have FOMO because there's so much pressure and they're really worried and they kind of force themselves to like something. And then that's when we've talked about before things, they find a way to get out of the contract and things are back on the market again.
Yep.
So I think it's really taking the time, even though there really is not a lot of time at all to make
Exactly.
these decisions. Tough.
Absolutely.
Yeah. Yeah.
So
Really tough.
now we'll talk about tip 4, right? Buying
Yes.
strategies. So that's the agent.
Yeah.
This
Yep.
is a tough
That's
one.
the agent. And we talk about this a lot.
Man, I'll tell you.
It comes up often, weekly, if not daily, and how important it is to find the really good agent. And we're just going to talk about it, that probably having a friend isn't the best.
Yeah. I mean, if your friend's good, then use your friend.
Well, there.
But
Yes.
don't just, and look, and I'm going to say this and, whatever. I mean, not all agents are created equally. And I don't mean to be negative about that either. It's just a fact. We are an industry that, we're handling the largest transaction that people make in their entire life. That's buying a home or selling a home. And a lot of times that agent can really make it a good experience or bad experience and really pay for themselves based on their experience and knowledge. And a lot of it is, if an agent's inexperienced, and we've talked about this before, not that a part-time agent can't do a great job, but it makes it very difficult in this market because if they do have a full-time job, this is a second career for them. They need to be really accessible and be able to respond quickly to this fast-paced market. So I find that's the number one mistake is that people, they don't take the time to interview. This is a job interview when you're hiring anybody else. And so, make sure that the agent is experienced. And because some of the mistakes that I see is that the agents that don't know how to negotiate properly in this market, their buyers can lose out. And I'll give you one of the examples. I had a very hot property and there were multiple offers. We have what's called an escalation clause here in Maryland. And basically you can offer in your contract, your offer that you present, you can put in an escalation clause, which means that you will pay over and above the highest offer up to a certain amount. And give you an example. Let's say that the house is listed for $250,000, and you may say that you will give $5,000 over the highest offer price other than yours up to $300,000, just for an example. So 5,000 over and above the other offer up to a certain amount. And I've seen a lot of agents make mistakes with this escalation clause because they don't fill it out right. And so it just gets overlooked. You can't always expect that the listing agent, the agent selling the house, is going to, be friendly with a document that's not, filled out properly, an addendum that's not filled out properly. So, the agent has to have experience and, putting that together. And the other thing is follow-up. So, I know as a listing agent, when I get a lot of offers, I don't always, I'm not going back and talking necessarily to the other offers or the other buyer's agents unless I'm prompted to do so by the seller. So having an agent that's persistent and continually pushing, for you, going to bat for you is very important. So if they're bad with follow-up, and a lot of times you can be the judge of that. I mean, if you can't get a hold of your agent or they're taking a long time to call you back or email you back or text you back, then what's going to happen when you get down to putting an offer in. And the other thing I want to say is that ask for references. And yes, you find out that, look, are you going to give an unhappy client as a reference? Probably not. But if you're asking critical questions, you'll be the judge yourself as to, how the questions are being answered to determine, if you're hearing what you want to hear. And one of the questions can be, how is that agent's follow up?
Mhm.
What would you have done differently in the process? Did you lose other offers in the process? So you can ask these questions and kind of get a good idea from that.
Yeah, and just to follow up with that, I mean, there are even I think it would be really hard to be part-time and be able if zoning issues came up, if something like that, and then there's so many different things that go on behind the scenes that you would need to, follow up in permits that were had or, boundary lines, just things like that, that if you're not doing this all the time, I think it's really difficult to be able to get those answers for your client. So yeah. And then we're going to be moving on to the next one. Is there anything else, Todd, you wanted to add on to the end of that?
Yeah, no, I think you're right as far as that goes. I mean, experienced agent is going to know how to, navigate through any issues that could come up and do a lot of checking on that property. The big thing an agent's going to do for you is really, and we'll talk about that. And tip 3 is selecting the property. A good agent is going to help you establish what your offer should be. And when we're looking at, houses together, um, I need to be telling you as your agent whether it's priced low, whether it's priced where it should be, or whether it's priced too high. So, your agent is really going to help guide you. As a buyer, you're going to ultimately make those decisions on, what your offer will be, your price, and what your terms will be. But you should be guided by an agent to say, hey, we're looking at this house. It's going to be a lot more activity on it. It's going to sell probably a lot higher than what it's listed for, because the strategy of that listing agent, or maybe it was just a mistake, is priced too low. So maybe they didn't know, the listing agent didn't really know that area or that neighborhood, and they didn't pull the right comps. And, and I think that's another thing is that, I think when we hear in the news about this hot housing market, and we'll talk a little bit more in depth about this, is that we assume that the sellers know what's going on. They could be advised, improperly by a listing agent. Maybe they're told the house is worth more than what it is. Or maybe the sellers just don't have a clue. So you can't assume anything. So a good buyer's agent, we're always hearing, why do you need an agent? Well, that's a perfect reason. Is a good buyer's agent is going to understand the market that you're buying in and be able to tell you what should happen through the course of making an offer on the property.
Yeah. Yeah. And then moving into number 3, selecting the property, talking about previewing the home. I mean, we have online now, there's Google Earth, driving by the properties, really getting a feel for the neighborhood, what it's all about. And I think that, is something that needs to be a lot of homework done on that initially. And when you're selecting and when you're looking at these properties, and have your agent, prepare the comps that are in the neighborhood that are a direct, comparable to that property.
Yeah, 100%. I mean,
Yeah.
that's part of being prepared. I mean, that, with, tip 3 here, selecting the property, the biggest thing is, guys, you should know when you're going out. We don't want you to get fatigued on looking at houses. You should be very strategic. I mean, we have the tools right now, the power of the internet, which we never used to have. And so you can actually, look at Google Earth, like Melissa was saying. You can see the street, you can see the neighborhood. Now, you still want to drive by the house because it could be a couple years old, when all of those images were taken, especially satellite images, and the driving, the street view. But at least have a good idea, because you're going to have in your mind what you want in the placement of the home and neighbors and yards and things like that. So, make sure that you're doing that ahead of time, that it checks the boxes. And because a lot of times when you're just looking at properties and you're not very strategic, you can skip things. So have a good checklist, preview the house, definitely get comparables from your agent. You want to make sure, the agent just can't do a radius of the community, because you can't necessarily cross major streets. You want the comps, the comparable sales, to be certainly within the last year, but ideally within the last 6 months. You want to know what's sold in that neighborhood, and, get an average square foot, above grade square foot size, so that you're comparing it to the right size of the house that you're looking at, and, have a good understanding of the bedrooms, the amount of bathrooms, whether it has a basement or not, off-street parking, garages, so that when you're looking at the house, you can try and find a comparable house to that, see what it's sold for and when. Look at how many days it's been on the market too, because that's going to really speak a lot to, that neighborhood. If you're looking at the comps and you see this house sold in 3 days, this house sold in 9 days, this house sold in 5 days, you're seeing that it's a very hot market, fast moving. Where if you see the exact opposite, it took 120 some days or 200 and some days, it'll tell a little bit more of the story of what's going on with that, that area, that neighborhood.
Do you feel it's while you're going to go look at the property, do you feel it's appropriate to bring a contractor with you and to have, someone come with you to put an inspector to give you an extra set of eyes? What are your thoughts on that?
Oh, 100%. One of the things that, the big thing with the house is, what's it going to cost you after you buy it? And do you need to do any modifications to it? Any updates that would be required either to get a loan or for you to even move in? And if you can, because the market's so fast paced right now, if you can take a contractor with you when you're previewing the house, so you don't want to waste a lot of time, especially if you're paying them to come with you. But if you're doing a lot of this upfront work, the due diligence prior to actually getting inside the house, you're going to have a really good idea if it's something that you want. You've checked out the property on Zillow or Realtor.com or wherever, your agent's site. You have seen the inside photos, the 3D tours if they have them. You've checked the aerials from, Google Earth, the Google Street View. Maybe you've driven by the property. You're really feeling it. You really want to see inside. It checks a lot of the boxes. It appears to, based on the description. Go ahead and take a contractor with you. And that way, when you're looking, they can be looking too. And it'll really help you kind of know more before you start to negotiate or write an offer.
Yeah, I think sometimes people, especially like a new home buyer, might not think it again in future, like, what if something happens with the hot water heater or the furnace, and kind of budget that, because it's a home and things, might happen. So
Absolutely.
yeah, I think and then again, obviously a really good agent's going to tell you that and going to prepare you for that and be able to kind of know your expectations, I think, is the biggest thing.
And they'll
going
probably
in.
know somebody, right?
Yeah.
They'll probably know a contractor, if you don't know one, that can go along with you, and maybe you pay a couple hours of their time, or maybe you just get a home inspector, to go
Yeah.
with you and do a lot of that upfront,
Yeah.
work. Okay,
Yeah.
so we jump into number 2, writing the offer.
Yes, writing the offer. And something to be said about the offer is that in this market, you probably only have one chance. You have one chance to write the offer, to get it in. Lots of timelines being sent. Lots of, we see it all the time where it's Sunday at 2, we're presenting, it's highly competitive. And it's, as we said in the very beginning, it's not slowing down. So I know you mentioned be aware of how many days it's been on the market. That's a big telling sign, especially in the neighborhood, to know how quickly these homes are moving. And to also determine the history of the property. And has there been a status change? Have we had it be active? Was it active for 2 days, went under contract, and now it's back on again? What's the reason for that? So it's really important to know what's going on with that property.
Yeah, and as a listing agent, I mean, confidentiality of your seller is kind of key. They have to talk about material facts, things that they know that could be, detrimental to a buyer. But absolutely, how many days the house has been on the market's like a key. I mean, if you're just looking at it for the first time, it doesn't mean that, it's the first day on the market. So it may have been on the market for 7 days. So it is important to know in that process, are they already negotiating offers? Why go out and get your hopes up if, so the agent needs to not just set an appointment, but you need to ask my advice would be to ask the agent to, ask the listing agent where they are in the process. So if you see something that's been on the market for 9, 10 days, where are they in the process? Do they have offers in hand? What kind of pressure is, being presented? Because a lot of times the agents don't update the status. And, what happens is if the agent's not updating it and you just go ahead and schedule the appointment without talking to the agent, you could be wasting a lot of time and getting your hopes up for nothing. But what you said, Melissa, is really, what you said is really important, because you want to see what the history of that property has, what it's the process of what it's undergoing, because a lot of times the property will go under contract and it could fall through. And a lot of times the reason it falls through is the buyer's financing, or it can be that the buyer got a inspection with a right to terminate, or an inspection to negotiate, and they couldn't come to terms with what they would be willing to fix, and it goes back on the market again. And sometimes properties will do this a couple, 2 or 3 times. Not the best for the sellers. We would never like to see that. But if you understand that, or know that that's what's happening, or what has happened, it can strengthen your position for negotiation. So you definitely want to know what the history of that property, has undergone through the first day that it became active. Like I said, don't assume that the listing agents are on top of their game. Don't assume that the sellers are on top of their game and that they know completely what's going on. But asking when the offers are due, there is a risk to this, because I've had situations where, and I've been on both sides of this, but where the agent will say, well, when are the offers due? Are you waiting until the open houses? So let's say, there's multiple offers. The house went on the market on Wednesday and it's scheduled for open houses on Saturday and Sunday. You as the buyer, you're thinking, well, that's great. I'll go see it on Saturday. Well, what happens is a lot of times the seller may get an offer on Thursday or Friday, and they'll say, you have to shut down this open house. You have to shut everything down. Our offer is good for 24 hours, or 48 hours. So you don't know. So the listing agent may tell the buyer's agent, hey, you know what? We're going to wait until the open houses are done Saturday and Sunday, and we're going to negotiate Monday. And that may not happen. So they don't owe you anything at that point, at least here in Maryland, where, everything is in writing, there's no verbal contract. So if they tell you, hey, we're going to wait, and then the sellers change their mind because they got an offer that they couldn't refuse, you're beat. So, but ask when offers are due, because that may say, hey, we're in a multi situation and, all offers due Monday. Now it's Friday. So there is some risk with that. But you can, on the flip side, if you're buying, you may ask that your offer be accepted. You may withdraw your offer within 24 hours and say, hey, look, we don't want you to do your open house on Saturday and Sunday. We want it. Here's our offer. Take it now, or we're withdrawing our offer. So you can do that too.
Yeah. And then, so this summer, we saw a lot of home inspections being waived completely. And things are changing where now it's more common to see the as is with right to terminate inspection. And what, give me your thoughts on the risks of each of those.
Yeah, well, I hate it. I hate to say it, but I hate it when buyers waive their right to an inspection. And again, I mean, I'm talking about how I advise my buyers. But I think that you should at least, here in Maryland, we can do an inspection with the right to terminate. And what that means is, so we say that we want an inspection with the right to terminate. It's as is. And basically, you can walk if you don't like the results of your inspection. So usually, we'll do a 7 or 10 day period. And then basically, Joe's telling me my internet's going in and out. I don't know if we good now? Am I okay?
Oh, you're good. Yep,
Okay.
you're good to me.
But
Yep.
anyway, to get back to it, so an as-is inspection, at least it's right to get in there with an inspector. And if you decide at that point that you're pull out, sometimes you can still negotiate, even though you say you won't. But I definitely think you should get an inspection. It makes me nervous when people waive their right to it.
Yeah. Well, you're walking in blind and you have no idea, and it's a very scary place to be. Um, and we've talked about leaning heavy on the comparable closed pricing. And I know we've talked about with the comparable sales within the last 6 months as compared to the listing. What else do you want to touch on that, Todd, about how important that is?
Yep. Can you repeat that again? I think I am having some
Yeah,
connectivity
of
issues
course.
here.
Yes. Yeah, you are going in and out a little bit, but it's okay. So basically, I know we've talked about the comparable sales and leaning heavy on them, and make sure that
Yep.
you're really following in the last 6 months. And that's really how you're going to base it. And it's a fine line on being priced too low, priced right where it should be, priced too high. Can you give some insight on that?
Yeah, comparable pricing. So, definitely, one of the most important things in putting an offer in is you want an agent that is going to tell you sold in that area. We heard Brenda say that, we heard Brenda talk about the appraisal process, and, where she clearly said, it shouldn't matter what kind of loan you're getting, the appraisal process should be the same. But the appraisers are going to look at the comparables, and, we're paying. So a lot of what's going on right now is the pressure on buyers to put in higher than list price in a lot of cases. But if you're getting a loan, there's going to be a checks and balances, at the end of the day. But what we find is that's been happening this year is that the seller's agents are asking people for a appraisal gap addendum. And what that means, which is critical, what that means is they're coming back and saying, okay, the house is listed for 250. You may not know this, but your offer may be 275 or 300,000, and everybody else's offer might be in that range too. But what's going to happen is a good listing agent is going to come back and try and see how much you'll pay over appraisal, because the good listing agent is going to know, I priced this house at 250 because that's what it's worth. Maybe a couple dollars more we can, it will compare, in a supply and demand environment where there isn't a lot of inventory. But what you may see is that the listing agent might come back and say, okay, now all these offers are so much more than what I think it will appraise for. And now I want to know what.
Oh gosh. Todd, your internet went
I
out.
back?
Hold on one moment. I think you're back. I think you're back. It was just a brief moment.
Yeah. Am I back?
Yeah, yes, you're a little laggy, but you're back.
Yeah, I don't know what's going on here tonight.
Yeah.
Must have a lot of people using the internet in the area.
Yeah.
What did you hear or didn't you hear?
So you were just talking about, the appraisal and the appraisal gap and paying, and you've seen a lot of it this year. And basically that was what you were catching us up on.
Yeah, so one of the things when you're buying, you have to be prepared, if you're asked whether you're willing to overpay for the property. And overpaying would mean that your appraisal in that situation where you're 250, let's say your offer's 280 and it appraises for 260. So if the listing agent's concerned about that, they might say, well, your offer's 280. They may say, what will your client spend over appraised value? Which means, number one, you got to have the extra cash because you're not going to get that loan for that price. And, number two, that's what you're now competing against, is who will pay more than appraised value. So that's what that can come down to.
Yeah. Yeah. And I do know that you have mentioned this in the past before when it comes down to putting in an offer, that, if you're going to lose sleep over it and lose the offer over $5,000 or $10,000, make sure that you don't miss out on that offer, and make sure that you go and put your best foot forward, because chances are it could make or break the deal.
Yep, that's exactly right. What I always say to people when we're negotiating, and guys, if you're listening, this may be one of the best tips that you get out of tonight. When you're wondering, where that top is in a competitive market, when things are, you're in a multiple offer situation and you really want that house, and you have to have your top line, your top end, you're out of your comfort zone financially. And what I always like to say to people is, when they say, well, what do I do? Let's say, you're debating whether you should raise the house price, your offer price, another $5,000. One of the things I like to say to my buyers is, look, if you wake up tomorrow morning and you find out that you lost the house for $5,000, how would you feel? And if they say I'd be okay with it, then I say, fine, keep your offer where it is. If they say I'd be upset, then I'd say, well, then go ahead and make the offer. Because, if you're finding that house that checks the boxes, it's what you want. You have to look over the long haul. You're going to be there 5, 6, 7, 9 years. Obviously, if you do overpay a little bit now, one of the nice things about real estate over the history of time is it is permanence of investment. And over time, it does appear to continually go up.
Mm-hmm. Mm-hmm.
But go ahead.
I was just going to say, and this brings us to our last tip. Tip number one.
Tip number one.
Yes.
Tip number one is don't drop out, guys. So if you lose the house or what appears to lose the house, let's just say you've been outbid, you're devastated. If it really is something that you're upset about, you wanted really bad, until you find the next house, keep a tab on it. Have your agent make sure that they're offering a backup contract, and watch that closely, that property closely. Have it put on a watch list by your agent so that you get any updates, because we are seeing in today's market, because people are being very reactive and they're securing these deals, that we do see a fair amount of them now go back to active, back on the market, because of home inspections and or financing.
Mm-hmm. And you want to know the second it does, that you don't miss out on that when it comes back on.
It's something that you want to zoom in on. So, yeah.
Yep, absolutely. And yeah, this has been a really great. Any final thoughts? First, on the don't drop out. Any final thoughts on that last tip, Todd?
Yep. Well, don't drop out. My internet's been dropping out, but hopefully, we got enough of this through that you guys found some value. And next week, we're going to talk about sellers. tips on selling in this hot market. So I'm equally excited for that. And guys, if we can help you out, drop us a line. Like I said, if you're in Maryland, we'll be glad if you don't have an agent to represent you here at Sachs Realty. If you're anywhere else in the country, go ahead and reach out. If you don't have an agent, I can point you in the right direction. If I don't know somebody in your town, that would be unlikely. But if I don't, I've got an amazing broker network. We'll find you somebody that is well qualified to help you out. And guys, if you like this type of podcast, you're interested in learning more about real estate, go ahead and subscribe to our channel, like or follow us in whatever platform you prefer. See you next week.